you take the lowest point of the head here, and you draw a straight line up to the neckline, this orange, this yellow line. So that is $457. What you do is you take that exact distance and you add it on to the breakout. Whenever we close above this line, you add $450 to that. And essentially, if we do that, we get, and I have to zoom out a little bit more, but basically the target price, and we'll just do it up here to about 457 right there. You're looking at a target of 2024, if this completes, to about $2,530 to $40 if gold really breaks out as well. And so I do think you could hit $30 in the year coming in 2024.
Garth Soloway from Verified Investing has shared insights that paint a positive picture for both gold and silver in the coming years. According to Soloway, if gold closes above a crucial level, it could soar to a target price ranging between $2,530 to $2,540 by 2024. Silver is also expected to witness an upswing, with projections reaching $30 by the same year. Gold is exhibiting slight positive trades as it strives to distance itself from the $2016.90 level. Supported consistently by the EMA 50, the precious metal is poised to gather positive momentum, aiming to breach the $2,065.70 area. Soloway points out a noteworthy similarity between the current market situation and a historical trend. Citing a sideways consolidation in gold from 2013 to 2018, Soloway suggests that a comparable pattern is emerging, hinting at a potential breakout to the upside. From a technical standpoint, the price movements of gold are garnering attention. Despite a dip on the first day of the week, Friday's downward trend is reversed from the $2,050 area. The following key challenge is overcoming stiff resistance near the 2040 supply zone. Success here could propel gold towards a retest of last week's swing high in the $2,049 to $2,050 region. Soloway ties these market dynamics to the Federal Reserve's dovish stance. Lower interest rates, signaled by the Fed's inclination, historically act as a tailwind for gold prices. However, in a recent CNBC interview, New York Federal Reserve President John Williams downplayed immediate discussions about rate cuts, stating that it's premature to speculate about them. Will Soloway's forecasts for gold and silver prices prove accurate? What are your thoughts on this? Let's delve into key moments from Simon Hunt's interview with these video clips.
Yes, it is a real move for gold. Eventually, we will finally get above that kind of 2080 level that we keep on hitting or piercing and then getting repelled back off of. And so just to show the chart here, we can take a look. You know, here was that big move up where we took out and we had that quick little pop and then the reversal. You know, part of that, and people don't really understand this, but this move up was just when the futures opened on Sunday night, East Coast time. And we saw this pop on very light volume. I think stops were run at that point, and it created kind of this false sense of a breakout. And then obviously sellers came back in and price came back in here. But again, notice how it stopped very quickly and we continued to make a low, higher low, and higher low, right? So that is bullish. The other thing to kind of keep an eye on, check this out. So if we zoom out, we have a very clear trend line right here, right? So if we draw that trend line across, this is a resistance trend line. This is your high, your previous high, the second hit of it, the third hit, and the fourth hit. What's fascinating about this is probability-wise, I deal with data and probabilities, that's how I read charts, is that what we know is that when you have a trend line and you keep hitting it, it weakens. And metrics show that when you hit a trend line on the fourth or the fifth time, it tends to break. Basically, ramming into a door once, you probably don't break it down. Twice, maybe not. By the third, fourth, fifth time, that door is going to give way. And that's what I think is going to happen here. This also happens to be, and I know this is a lot, but this is some cool stuff on gold, is that we could also make a case that this is an inverse head and shoulder pattern, which is one of the most bullish patterns in the market. And so basically what we have here is shoulder, head, and shoulder. And what's cool about this is that you could actually go on and calculate out the target price. And the way you, and this would be the target for 2024, what I have at least. And what you do is you take the lowest point of the head here and you draw a straight line up to the neckline, this orange, this yellow line. So that is $457. What you do is you take that exact distance and you add it on to the breakout. Whenever we close above this line, you add $450 to that. And essentially, if we do that, But basically the target price, and we'll just do it up here to about 457 right there, you're looking at a target of 2024 if this completes to about $2,530 to $40. So that's pretty cool as well. I'm going to show you one more thing, and I hope people aren't getting bored of talking about gold, but it is a fascinating chart, is that if you look, and we go to our weekly chart on gold here, and let me refresh it so we can kind of see what we have here. So if we go to our weekly chart and we look at the data ranges, so we basically had this sideways consolidation from 2013 all the way to 2018 before we broke out. Well, that sideways consolidation was made up of a big move here, a smaller move here, and then a smaller move here, and then the breakout. And what you could see here is big move, smaller move, and smaller move here, which again implies that this should be on the borderline of this type of move to the upside. So again, there's like lots of things, and I just love charts. You can see I love charts and just finding these different kind of confluence type things. But across the board, with the Fed going dovish, we had the Fed just recently talking dovishly, 3 cuts next year, markets pricing in 5 or 6 cuts. All of these things are pointing to gold actually officially breaking out.
Given its industrial ties, Soloway emphasizes the significance of monitoring economic conditions for silver. However, the precious metal's perceived safe haven status, particularly if gold experiences a breakout, could propel silver toward the $30 mark in the coming year. Silver has demonstrated resilience, marking a 0.45% increase to $24.29 per ounce, the highest since October 6th. This positive trend was further fueled by a 1.55% rise on Thursday, attributed to a decline in the dollar and U.S. yields. While Soloway deems a drastic pullback in gold unlikely, he acknowledges the potential support levels of 1,675 or even 1,500. This scenario, he suggests, could present a compelling opportunity for savvy investors to strategically enter the market, especially in light of anticipated interest rate trends and potential inflation upticks in 2024. After an explosive start to the month, witnessing gold reach an all-time high of $2,152 per ounce, prices have experienced a pullback. Traders, keen on capitalizing on the next significant move in precious metals, are strategically banking windfall profits. Let's get back to the interview.
This down move way oversold in the near term on the daily chart of silver, and we're going to get a bounce. Now, I didn't guess we were going to get the size bounce we got yesterday on the Fed. That was huge. But for me, you're now kind of stuck underneath this downsloping trend line, right? So for me as a silver, analyst, I'm looking for price. We need price to basically break above 25.5. If it can break above 25.5, you've got some really good upside that I think next year could retest the $30 level. Again, we know that silver is partially industrial, so we have to monitor the economy as well. But I think overall, the store of safety aspect will take control if gold really breaks out as well. And so I do think you could hit $30 in the year coming in 2024. If gold pulled back to this level, would this be a good point? And what I would do is I would look at the longer term chart and maybe go back to 1999, right? To 2000. And what we could do is we can drag a trend line all the way up through these lows. And again, you could see how it comes right through this middle point, right through these lows, through this low, this low, this low, this low. And again, that is a sloping up trend line. So if by chance, we were to see a big pullback, and I don't think this will happen, but you would have epic support around 1,500. Secondarily, what you would also be watching for, in my opinion, would be kind of these secondary points, which interestingly enough are also parallels. And parallels are something that are very, very important in charts. And we can even stretch this back here. But notice how this line is parallel with this line. So this gives us a support around 1685 as well. And again, I'm personally would be very surprised if we saw this type of pullback. Since considering interest rates are starting to come in, I think we're actually going to see uptick in inflation again in 2024, mid to late 2024. But if we did pull back to 1675, then down to 1,500 and change, that would be just, load the boat kind of scenario. Is he seeing something in the economy that has him concerned where he had to pivot faster to being more dovish than we would have expected? And then the last thing I would say, too, is that Janet Yellen has been vocal, very unusually vocal. You almost feel like you have two Federal Reserve chairmen out here, Janet Yellen and Jerome Powell. And we know that the US has about 34 trillion of debt, and 7+ trillion of that is rolling over in the next year. And so if you think about it, is there some pressure being applied to say, hey, listen, we need to get rates down for 2024 from 5% where they were, because this debt will have to be refinanced essentially. And we can't, as a country, we cannot be paying 5% or more on this debt. It has to be lower or we're going to go bankrupt very, very quickly. So there's a lot of different angles here that, who knows which one it is, or maybe it's a combination of all of them. But I do think that the Fed is going to try to be more dovish. My bigger question, though, is, here you have a dovish Fed and CPI is still 3 to 3.5%. There's 3.5% inflation out there. With the stock market at or close, or some in this case of the Dow hitting new all-time highs, does this create another uptick in inflation, which we kind of saw in the 70s? And that, again, is something that the markets will have to come to the reckoning point of in some point in 2024.
Considering the potential scenarios Soloway discussed, including silver's resilience and the prospect of a gold pullback, what factors do you believe will play a pivotal role in shaping the trajectory of gold and silver prices in the coming years? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.